Welcome to the show, The Wealth Snowball. This is your new favorite YouTube channel. We look at stocks, options, dividends, all the good stuff. I am your lovable host, Bart Divvy. That's Divvy. Why? Because we like you. That's why. Checking in here on a Wednesday. This is Wednesday, April 19th, 2023, 10:02 a.m. on the Swatch Watch Central Standard Time. We got a little red action going on today, don't we? S&P down 0.20, Dow down 0.24, NASDAQ 0.25, and the Russell Simmons is down 0.34. Currently looking in on the SPY 413.50. Tried to get a trade in right. It was actually right after the bell yesterday. Bing, 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 bing. For some reason, Robinhood now allows me to trade a handful of, I believe I'll have to check the details. I think it's just indices based ETFs like the SPY and the Qs. So I put this one on the board. That would have been a great trade, right? 430 to 440 spread at May 2nd, 10 credit spreads. I was on the cusp of 14 cents per. What would we have to do to replace that trade right now? It looks like we need to be around 11, 10 to 11 in order to get that filled. If the SPY goes up today at any point, races up, then it could possibly fill. Otherwise, we'll just wait. We'll wait until, no, you know what? Let's look at replacing it now. Excuse me so much. Let's look at replacing it right now. What would we need to be doing? Well, around 11, still showing low likelihood to fill. 10 contracts, that'd be $110 bills. We could go in at the 10 and just get it filled now if you'd like. Get something on the board. Either put another one on today for May 3rd, right? Yeah. Yes, indeed. So that's $100 on 10,000. $100 on 10,000 in 13 days. Quick math. Boop, boop, boop. 100, and we have 10,000 in collateral. 1% in 13 days divided by 13 times 365. 28%. I've just suddenly talked myself out of it. So I have suddenly talked myself out of it. We're going to leave it up for now because I have a feeling that SPY is going to go up sometime today. Maybe not a lot, but enough to get us some more action. So let's get off of that for now. It's now essentially canceled off the pending board. What else is happening? Need to look through. So Coterra and most all oil and energy stocks going down again today, which means we can close this EOG, the OG, for what? Pretty widespread, 5 to 15 cents. Could probably close that easily for 10, would you say? $10. And we just rolled it for an additional $87 on the 12th. Could close it probably for 10 or roll it again if we'd like. Or with 2 days to go, maybe just let it expire. What do you think? Today is Wednesday already. It's down to Chinatown, 117.45. So what does that mean for Valero? Valero. Whoa. So Valero, I think, is under 125. We'll look at it. We'll take a good look at it now. Whoa. Our Netflix spread is at 100%, but what would it be to close it? So it'd be about $2 max. That'd be $10 bills. And when we collect 110. Yeah, why not pull that off right now? Pull it off right now and just put that money in our pocket, right? So we have 5 of those. We can do 2 cents. And with the activities that go on with Netflix, it should be able to close. Are you looking to get a credit or a debit? Unfortunately, a debit, but it's only $10. Release the hounds on the collateral. There's one. Do we hear two? Yep, all five. So all five, that cost us $10, but we just put that on yesterday. Yesterday. We put it on yesterday and profited $100 bills. So pretty nice. Very nice on that sweet little credit spread. We'll take that. We'll take $100 a day any day of the week. And how often on Sunday, Bart? Twice on Sunday. So this should go up just a bit before our very eyes. 1946, 1958. There you go. Now you know. These Devon puts are in trouble because Devon's under 55. Yep, it's at 54.60. So those puts are under pressure. We could roll your boat, or we could just take assignment and then begin to sell those calls because oil is going to go back up soon, and all of these companies are going to be like in the green. And then we could use that opportunity to, if we get assigned at 55, we could roll it at 56, just $1 out, and make some nice bank, I bet, on the next green day. Philip Morris, I believe they report earnings tomorrow. And we sold these 4 covered calls at a very aggressive number, because if you look at that, it's at 101.60 already, pressuring the 102, and we don't mind because our position is what? Isn't it 92 something? 92.54. So yes, it creates a tax event. But as I always tell people, if you're paying taxes, hey, that means you're making money, the dollar bills. So if we get those called away, that's fine. But guess what? Philip Morris could report earnings and it goes down. That's even if it beats on both the top and the bottom on the earnings release, on the earnings report, they could still go down. You know how fickle the market is right now. Very fickle, like a dill pickle. That's not a saying. It isn't, is it? But now it is. And we aggressively sold this Johnson & Johnson 160 put to possibly be assigned because Johnson & Johnson was in the 161s yesterday, now already back up into the 162s. So that could end up being a nice little trade because we collected what seemed like a little bit of money, $42 against the 160, but it was for just a couple of days. So keep an eye on that. In the meantime, I have a new put scan spreadsheet for you, and this one's a little different. I'm still going to create the spreadsheet that I have been sharing with you, which is just a straight put scan with a $1 billion market cap minimum plus a 20% annualized return minimum, sharing that spreadsheet. In fact, we'll probably just go through it right now. No, we're almost at 10 minutes already. So we'll go through both of these spreadsheets. I'll attach this one to this video now and then both of them to the next video. But this is for dividend payers. And what I did, because it's dividend payers, is I rolled down the annualized return to a minimum of, where is annualized return? A minimum of 15% instead of 20. So these are all dividend payers. There's like 68 of them on here. So we're going to look through that together. So, because there's probably going to be some action on here for us because we love the dividend stocks. Got implied volatility, potential return on the particular trade itself. And then here is the column for the annualized return. Here's our delta, what's your functions. So I'll share that in the description of this video. And then in the next video, we'll build the typical daily put scanner and attach that to the video as well. So there we have it. Just checking in here on a Wednesday, 10 a.m. now. Make sure you are indeed a subscriber. Like the video, comment, share it with a friend, and I'll see you in the next video.